You're now tuned into the Money Level Show.
Hello, everyone. Welcome back to the Money Level Show, where we think, act, and prosper. And today we're at the Rural Symposium. We're on the last day, sadly, but also happily. We got some things going on that we need to get back to with families and everything. But I'm here with Rudi Fronk of Seabridge Gold. How are you doing today?
Daryl, great to be sitting next to you. Thank you.
Yes. So what's some of the sentiment that you're getting here at the symposium this year?
Well, I think when you listen to the macro presenters, you have to be bullish on gold and copper going forward here. And that's kind of what Seabridge is all about. I mean, when you look at the gold is now finally coming back into the center part of the global financial system, which I think will be really constructive for pricing going forward. And in the copper market, the elephant in the room is a lack of future supply. Demand will continue to increase, but new mines are not getting built. So if you have an advanced stage big copper project, you should be in good position as well.
Mm-hmm. Got it. So when you mentioned like the global, many countries are coming in, they're buying gold hand over fist. And that's something that's been keeping the gold price elevated. Even when we've seen some dips in the price tends to recover, and it's been leveling out at 3,300 an ounce measured in dollars. How do you see this price being impacted going forward? Do you think like gold is still undervalued?
Yeah, I do. If you look at it from a historic basis, number one, it's underowned. In the West, the exposure to gold now is less than 0.5%. Typically, throughout history, it's been 2 to 3%. But I think more importantly, if you look at gold's role as backing financial assets, financial assets today sit at about $400 trillion. The value of all the gold above ground that's ever been mined is about 20 trillion. So basically, financial assets are backed by about 5% of gold. If you go back to 1981, when gold made its prior peak, financial assets were backed by 26% by gold. So if you just take those same numbers going forward, that we start to see some more backing of financial assets by gold. We're forecasting a gold price in 3 to 5 years of $12,000 an ounce or higher.
Wow, that's mind-boggling. I mean, I got in 2020 and have been buying physical metals, and I know that the mining companies, they struggled for a while, and then they're starting to have a lot more life to them. I mean, even here at the symposium, a lot more optimism, a lot more deals being made. You got some acquisitions happening in the space, and so it seems like the activity within the miners and the explorers and everything is like picking up.
Yeah, I think a lot of that has to do with the current price environment. A few years ago, the big companies were really not making a lot of money, and whatever they were making was being returned to shareholders either in the form of share buybacks or dividends. You look at companies today, the amount of cash flow they're generating is phenomenal, and for the first time in many years, they can now start looking to their future, and that'll be to do some acquisitions and find some new projects to bring in their portfolio. And here we sit at Seabridge with the world's largest undeveloped gold project. And if you ignore our gold and look at our copper, it's the third largest undeveloped copper project in the world.
Mm-hmm. Yeah, so one thing that drew me to Seabridge, I watched the interview that you did with Rick before the symposium, and the magnitude of KSM. Could you speak to like the magnitude of this asset?
I pinch myself sometimes just realizing what we have in our possession here. So we own 100% of KSM. KSM is comprised of 5 different deposits. It's really a district. Those 5 deposits give us 12 billion tons of economic resources. Those 12 billion tons host 160-something million ounces of gold and 59 billion pounds of copper. If you take all of the metal that we report as a company and divided by the number of shares at today's metal prices, each one of our shares is backed by $9,000 of metal value in the ground per share. And today we're trading at about $15 a share.
Yeah, so that's like a big disconnect there. And what would typically be that ratio for like the price of the metal versus the share? Like, I mean, you can refer to, even if it was in the 2011 timeframe or whatnot, maybe it was more reflected a little more accurately around that time period or whatnot. But what would that ratio be
But
like?
I'd like to look at it in terms of net present values because that takes into account costs and time value of money.
Yeah.
So if you look at the development stage companies like Seabridge, development stage companies tend to trade at 30 to 40% of their net present value. Today at Seabridge, if you take our KSM project and our Courageous Lake asset combined, at today's metal prices, you have a net present value of about $25 billion. We're trading today at about $1.5 billion market cap. So we're trading at about 6% of our net present value. If you give us a multiple that you would typically have with development stage companies, our share price is bound to go a lot higher.
Yeah, definitely. And I bought into the company, and I think that the numbers are just massive, and so that was one of the reasons why I considered buying into the company. And so currently, the premium to NAV or discount to NAV is, you said, at about 6%.
Yeah, we're trading at about 6% of NAV. Whereas typically it should be 30%. If you just apply that number on what we have, it gives you a market cap expectation of $7.5 billion. We have a market cap today of $1.5 billion. So you're looking at, with 100 million shares outstanding, you're looking at a share price value in normal times of about $75 per share.
Yeah. Wow. Yeah, that's amazing. So with some of like the companies, even here, shareholders are often concerned about the risk of dilution or having to finance and raise money and such. What does Seabridge have going to kind of manage that aspect?
Well, that was a key guiding principle from day one. When my colleagues and I started the company 26 years ago, one of our guiding principles, recognizing that dilution was a big issue in the mining space, was the idea of growing ounces in the ground faster than shares outstanding. The thought being that the more gold you can provide on a per share basis, the better your share price should do. And if you look since inception, the price of gold is up about 1,000%. Our share price is up over 6,000%. We've continuously grown ounces per share. Yes, we've suffered dilution. We have to raise money to fund the activities, but we've offset that dilution with what we define as value of growing ounces on a per share basis.
Got it. And what do you think obviously you have this big asset that you're sitting on, and that has a lot of potential. And what do you see the future of that being? Like, what's kind of your vision there, and what is Seabridge working towards?
Well, we've been very clear that for many years now we've been, being honest that this is a project that's well beyond our capabilities to build. We need a major mining company as a partner. There's maybe 6 or 7 companies on the planet that have the technical, financial, and social wherewithal to build a project to scale. We are running a formal joint venture process, trying to engage a big mining company to come in as a joint venture partner, and we're now towards the end of that process. We have 3 finalists at the table now we're engaged with, discussing deal terms and structure, and I expect to be able to announce a joint venture participation by the end of the year. Our goal in a joint venture is to hang on to a meaningful interest in the project, but try to minimize our capital exposure to what has to be spent to get to first production.
Got it. And then what's typically obviously time frames for folks, like people think about time frames, and different companies are at different parts of their process as far as whether they're pre-feasibility or they had their feasibility study done, or they're drilling and finding the deposits and such, and so Seabridge sounds like Seabridge is already at the point of doing this joint venture with a bigger company to start to develop and start to go in production and such.
Yeah, so we have completed pre-feasibility on this asset, showing a very robust project. But even beyond that, we now have permits in place for this project. This project is permitted. We've actually spent about $500 million over the last couple of years on early site construction. We've built roads, we've built camps, we've built fish compensation areas. We're tying into the power grid. So it's well down the track on that. When you look at the path forward from here, next logical step for the project is to complete a bankable final feasibility study, so the project can move into final phases of construction, and to bring that partner in. From this point forward, you're probably looking at 12 to 15 months to complete a bankable feasibility study, then probably a 5-year build for the project to get to first production.
Got it. And you mentioned that there's a lot of copper. And so what are you seeing like with copper? So obviously gold has a role as a monetary metal and a hedge for against chaos, insurance for money and such. And we got central banks buying it. Copper's different resource used for different reasons. And what are you seeing there as far as demand for copper?
It's growing. Obviously, the green energy initiatives around the world requires more copper for electrical, distribution. New copper mines are not getting built while demand continues to grow year by year by year. The big companies like BHP are trying to find and focus on big new projects that can get built, and the world's going to need new copper production. That's just a fact. And, I've learned in my experience how difficult it is to take a project like a KSM through the permitting process to get to first production. If you look at from discovery to first production, it's more than 20 years. So to think that with higher copper prices, all of a sudden we can just produce more, that's not how it works. So new mines have to be built, and that's where a project like KSM stands.
Okay, got it. And there's like, I guess, a typical time frame of like 10 years. I think it was 10 years to get a copper mine built and stuff. Is there any difference there with, the gold and the copper piece, or it's all like under the same regulation that you have to go through?
Yeah, so for us, you will produce a copper concentrate that'll get shipped to a smelter somewhere on the Pacific Rim. But most of the gold reports to the copper concentrate. So as we ship out concentrate, it'll be producing gold and copper. And then also we'll have a separate circuit to actually recover more gold as a doré. The nice thing about gold is no matter what you produce, you're guaranteed to sell it. There's no marketing involved. There's a world market there that you're just a price taker. And I think over time, those prices will continue to go higher because of gold's role as a financial asset or as a monetary asset. Whereas copper it's a industrial metal. Mm-hmm. It's driven by annual supply and demand, unlike gold.
Yeah. And so when you mentioned $9,000 of metal per share, how much of that is the copper? Was the copper factored into that, or?
Yeah, if you look at our asset base today, it's probably a little more than 50% gold as all the assets, and a little under 50% copper. Okay. But if you look at our 5 deposits at KSM, each of the deposits have different levels of gold relative to copper. 3 of the 5 deposits are more gold-centric, 70% gold, 30% copper. The other 2 deposits are more copper, 70% copper, 30% gold in terms of in situ value.
Mm-hmm. Got it. And this is your first time, not your first time. This is not your first go around. And so speak to that. Like, how does this compare to some of the other success that you've had in the past, some of the other opportunities and projects that you've developed in the past?
Well, I've had some wins and some losses. Back in the 1990s, I was running a public company called Greenstone Resources. We built 3 mines in 5 years in Central America. And then as the metal price deteriorated on us and also too much debt on the balance sheet to build these mines, the mines were expropriated. So I learned firsthand how real political risk is. On the other hand, I've had success with a large project like this in the past called Cerro Casale that was 51% owned by a company called Arizona Star. I was the non-executive chairman of that company representing the big shareholder. And we sold that company to Barrick Gold for $850 million in cash. So I truly appreciate that it takes time to develop assets like a KSM, like a Cerro Casale, but there's very few of these projects out there. For me to have the opportunity to have 2 of these in my career, it's just phenomenal. I pinch myself in the morning sometimes when I wake up saying, wow, how lucky I've been.
Yeah. And so and just for like context for the viewers, so to have 2 of these, that's rare?
Very rare.
Very rare?
Yes.
Wow. Okay. Well, you all be sure to check out the website. Well, actually, just point people to the website and the stock ticker.
So we trade on both the New York Stock Exchange and the Toronto Stock Exchange. Our symbol on the New York is SA, very simple. And on the Toronto Stock Exchange, it's SCA. Our website is seabridgegold.com. So a lot of information there, a lot of information on the project, and also a lot there in terms of the gold market. We publish quite a bit in terms of our views on gold, where it's headed. And you can go to our website and look at our recent slide deck from our annual meeting that kind of sets the stage on why we do believe gold is going to hit $12,000 an ounce over the next few years.
Well, with that being said, I will link to that in the description below, the website and the stock ticker for you all to check it out. This is not financial advice. Thank you all for watching, and thank you for joining us, Rudi.
Gerald, really appreciate it. Thank you.